Good morning, everyone, and welcome to the European crossover webinar. I was saying it was starting in a couple of seconds, so I usually like to go on and wait till I make sure I have it on my MacBook. So I had the audio working fine, and I am listening to that. Okay, I didn't. Steve was saying, hang on a moment. Okay, great. So here we are on FOMC day, and we're seeing the euro continue to push higher here. One thing I guess I'll have to ask Steve is although I do use another program to look at the crude oil, but when I pulled up the U.S. oil, let's go here. See right here? There's no trading. It's stopped since yesterday afternoon. It hasn't started, so maybe Steve has a input there. I don't. I also tried just loading crude oil futures here. That one seems to be, I guess, updating, but I'm not sure it's the right one because when I looked on another program on the front month, it says the cost is $46.44. Okay, yeah, it looks like that is it. So, but the U.S. oil, have to have Steve ask him about that. Is see here's just sitting here at 45.86. Not sure why it's, but this one on delay. Okay, he says it seems to be stuck for him as well. I'm just going to move this here so that we can see this. Look, and we can see here. It's trading here. We did make, wow, boy, what a wallop we got too here on the crude oil. Obviously, we've seen this impacted here with the dollar CAD here at 34.77. So we're still a little bit weaker here, but we've come off those lows. I did have a weekly support level. Now that's a weekly closing support, but that's at 47.15. So we'll see if by the end of the week, maybe we've come back and been able to go in and recapture that. But we'll see. But I'm glad to know that Steve says his is stuck too. So no, it's not just me. Looking on for today's economic report, we do have German PPI numbers that came out already. They were looking, let's see, the actual came in at 0.10. The prior was 0.3, so a surprise, higher. It's just showing. And let's take a look here. We do have UK inflation coming up in about another half hour, CPI, and also PPI. And Canadian CPI. That'll be out at 8:30 Eastern. And EIO all stocks. And let's look a little bit for obviously the big mover is going to be FOMC. And here we are on we'll see how that goes and plays out. So the movers for today is going to be the UK CPI and PPI, as well as Canadian CPI, but that'll be out at 8:30 Eastern. Let's move this out of the way. Well, just obviously, we're not going to see a whole lot of movement, although the euro is continuing to go on and work higher here. I guess most are, as we talked about since Monday, are buying into this whole dovish high thing. And really, in light of what you've seen here happen in U.S. equities, and boy, have we fallen, and it's really taken its toll here, is here on equities. Even when we've received a bounce here, let's move this. I talked about that 25.53 and actually got a hammer bottom at that point and moved up and had a decent challenge all the way up to 25.75. Came back down and retested it with an inverted hammer. We're looking on the 2-hour chart, and now we're trying to work back higher again past this 25.53. But these kind of uh, volatile moves that we've seen, and really just downside moves, and really have scared the market to a point that there's even thoughts that maybe the Fed, I don't think that's not going to happen. It would maybe not even cut at all, but I don't think the Fed would go on and do that. I think what we'll see is the hike and the dovish hike, and obviously the euro's already pushing in and buying into that at this point. And we have even the dollar index kind of pushing a little bit lower here. We have that key support here. There's that 96.72. And there's our 96.72. Remember, we had that marked off for daily key support level. And that's where the market ran to yesterday. And we saw a nice pop back off of that. Why these levels here really important, especially when you see me put the asterisks. Those are actually the daily, either key daily close, key daily close low, and key daily close high. But these are important levels, so you'll rarely see me put them both on the same, the high and the low. But big significance if we're able to go and get on either one. So let's go on and update the day here, and then we'll go on and move into the news. Obviously, the big news was the crude oil, which certainly impacted the Canadian dollar. So the Canadian dollar weakened to a 1.5-year low against its U.S. counterpart on Tuesday, underperforming most of G10 currencies as the price of oil, one of Canada's major exports, slumped. Well, I think it did more than just slumped. But it says crude oil futures settled 7.3% lower. Holy smokes, can you imagine that? 7.3% at $46.24 a barrel as the market grappled with reports that U.S. supply would continue to surge, even if demand weakens as global growth deteriorates, which many expect. It's all oil, said Win Tin, global head of emerging markets at Brown Brothers Harriman. I think everyone is freaking out about the global slowdown story, and that's it, folks. I mean, they are really, this is grabbing, a hold, and I'll go back to where we were on the euro. And so you're thinking, wait a minute, the Fed's going to hike, and we're still working lower. And once again, that's what the if you want to talk about it, it's like like the narrative, and that's the current narrative that the market's focusing on. It's not that it hasn't not been around, but obviously with the fall that we've seen in equities, it's exacerbating. That's obviously a result of the same thing, but the fall in equities is exacerbating that those concerns. And as the gentleman even said, and I don't think it's an over, or him going overboard, which is saying the market's freaking out on this whole global growth story that we're going to go on and truly weaken. So I think everyone is really freaking out about the global slowdown story. The Bank of Canada is worried that lower oil prices and cutbacks in production will reduce activity in Canada's energy sector. Canadian government said on Tuesday it would spend $1.6 billion, mostly through loans, to assist the country's oil and gas industry, which has struggled to move energy to U.S. markets because of full pipelines. And to headwinds for Luna, Canadian factory sales edged down by 0.1% in October from September on lower wood product and primary metal manufacturing sales. So kind of like a double M here. The dollar index fell to a one-week low as investors unwound long bets on the currency, anticipating the Federal Reserve could slow the pace of U.S. interest rates hikes after this week's policy meeting. And let's go and move on to the dollar. The dollar's in the Fed's crosshairs and struggles near 1 week low. It's all about the Federal Reserve for the dollar on Wednesday as it struggled to shake off expectation policy makers would slow the pace of U.S. monetary policy after a keenly watched meeting later in the day. The safe haven yen and Swiss franc held a firm tone on an overnight plunge, and oil prices provided another stark reminder of the dim prospects for the global economy. And as I said, this whole global growth thing is really grabbing the market and has controlled the narrative of what we're looking at right now. And underscored why traders expect the Fed likely to be done after an expected rate hike this week. the positioning going into the FOMC is very defensive, and that's why we're seeing the dollar weakening, said Michael McCarthy, chief market strategist at TMC. The risk sentiments has been soured by weaker than expected economic data out of China and the Eurozone, while Sino-US trade dispute and a collapse in oil prices have added to fears of the global economy is fast losing momentum. The thing is that, and we saw that here with oil too, is, let's go back here. Well, like I said, we're pulling up, it's, as Steve was saying, crude oil showing it's stuck. But let's go and click on here. When the markets free fall like that, I don't think that's much to. I don't think that's a lot to say. Is that we've kind of gone somewhat into a free fall here. When you look, let's even just back this to even back into a 4-hour chart isn't even giving it due justice. If you look here, can you imagine? We were here almost 77. We've fallen over $30. It's just, and when you look at when the market was trying to find some semblance here of a support here around the 52, rally back up to almost 55, and then we've just fallen, and instead of just taking out 50 with getting past the psychological level, they really slammed it, and there was no reprieve. And that, as the gentleman was saying, has the market freaking out. And when markets fall like that, people just want to get out, and it's like, get me out no matter what. This is what I think you can truly say to a certain extent can be, at least on a very short-term basis, like at a capitulation, because when you lose we were just at $50 earlier in the morning, as we lost it, and then kaboom, the market really, goes and falls out of bed for, $4 from that move from 50. It's quite a fall, and has the market really concerned. But anyway, getting back here to the Fed, in Asian markets, we're looking to China's 3-day economic conference. Started on Wednesday for Beijing's growth and reform objectives. The dollar was down 25 tenths at 95.86. Nervous anticipation was palpable in the global markets as they awaited the Fed's decision later in the day. According to CME Greece Fed's Watch 2, the probability of a December rate hike is 69%, while U.S. central bank's last median dot plot projections from September indicated 3 more hikes in 2019. Rate future markets is pricing only 1 more rate hike for 2019. Comments by Fed Chairman Jerome Powell in late November that the key interest rates was just below neutral, a level that neither breaks nor boosts the economy, have bolstered investors' expectations. We think the Fed would raise rates in 2019. The Fed's reaction will be very data dependent. Said Stephen Innes of APAC trading at Atlanta. Moreover, President Trump kept up the pressure on the Fed, taking another jab in the tweet saying, I hope the people over at the Fed will read today's Wall Street Journal editorial before they make yet another mistake. And just moving on real quickly with gold, obviously a big mover. Markets largely in a holding pattern as everyone is focusing on the FOMC. Obviously, that's the story of the day. Fed is expected to raise interest rates a 4th time this year, but weak stock markets and global economy growth may prompt it to tone down its monetary tightening. We're seeing 1240 as a good technical support, and 1258 as the first technical resistance on the breach of that level will go up to 1270. And the very last, before we test it, just we'll fly through this real quickly. The rate hike could draw the ire of President Trump. This is all focused just on the Fed. You're at an inflection point, said Carl Tannenbaum, chief economist at Northern Trust. You're most likely seeing growth slowing, and you don't know how much growth and what kind of growth is left after the fiscal stimulus wears off. With borrowing costs after Wednesday's expectation rate hike close to, if not, the broad range that the Fed officials have identifies as neutral for a healthy economy, policymakers are likely to emphasize that future rate-setting decisions will hinge on new economic data. To that end, economists say the Fed will probably modify or remove from its policy statement a reference to the likelihood that further gradual increases in its overnight lending will be needed. So they're looking for that to be removed. If it does, they'll probably push the dollar even further lower. And let's go on and move in now to the bias chart. And we'll get ready for today. Obviously, we'll have wider ranges on our bias chart. And looking here at the euro on a daily, let's see if we can find, obviously a big deal for the euro today is going to be right there. You see that? Coming across on the daily, 1469. That would be key. Let's go on and put that in place. Right there, 1469. That'd be key if we can get above that on a daily close. And probably, I don't know if you'll see that much pushback, but if the dollar, if we do get that, soft, or what people are referring to as a dovish hike, you may see the market just pare back just a little bit from that and probably reassert it. The market's really wound, like it really wants to go much further. We shall see. Next key level right here is 1519, if we can get past that on a daily. But this will be your initial challenge. We'll see how the rhetoric, obviously the rhetoric will have its moments, but we could end up getting knocked back just a little bit, maybe not that far, and then try and reassert itself before the end of the day. So let's go and mark 1469, which is not that far away. Key support on the daily would be, well, that's still a long ways off. We'd really have to flip things around, which would be 1288. We'll see where we stand once we finish up the rest of the analysis here on the euro. Moving on to the 2-hour chart. Here's a key level right there. And you can see that coming across. We do have this coming in. I'm looking here at this 1499. Right there, 1499. To a certain extent that they have this dovish hike, that's where they're going to want to go to, 1499. And you can see the significance here. That was only the high. I usually don't do things off of the high. I like to do it the body touches, but you can see you've got that coming right here where the market gets above it. It's holding it for support, dips below resistance, comes back, support, get back above it. It's support, before we break, and then it's now resistance and the same thing. So this 14.99, that's where the market, depending on how, if it is dovish in rhetoric, where the market would want to go to 14.99. The key will be if we can go and get the close above 14.69. Let's go and take a look at the support now. Obviously, once again, wide ranges with today. Support's going to come in, coming right across there for now. 13.39. 13.39 for support. This is that prior resistance we talked about. I think we're going to go and leave that there. We said 13.39. That's close enough. 13.36. Now, don't forget, if obviously it doesn't appear it's going to be dovish. I mean, I don't want to call it hawkish, but let's say not so dovish. They'd probably overshoot this and maybe dip down to about 13.27-ish, something like that. So we'll keep this 13.36 here on the euro. Let's go on and move in now to the cable. That'll be the key area right now. And that seems like a long ways off. It's going to be 27.16. 27.16 on the daily. There we go. And let's take a look. So let's mark this up real quick. That's a pretty long jump here, but we could scale some stops here. If we were to push beyond this, it's going to be, and we could do that if the dollar really comes under some pressure, it's going to be 27.61, 27.60, actually just a hair bit lower, 27.58, 27.58. There we go, 27.58. I don't know what the heck happened on this thing. Hold on. There we go. So it's going to be 27.58. There we go. And let's go and take a look for support here. No one really expects it to be not so dovish. We're going to go right here. We've got 25.99 here. We're going to call it right there, 25.98. 25.98 on the cable for support. And let's get going with the Aussie. Obviously, we're not focusing too much on these exponential moving averages because right now we're looking at a little bit broader picture because the volatility we would expect once we get into the FOMC, the actual release. So we're hitting these main levels. Yeah. This is daily closing support right now. We stabbed through, but we weren't able to close, which is 71. We'll call it right here, 71.71 on the Aussie, on daily close support. Key closing right now is going to be 72.27. It may seem rather simplistic, but what you're looking at is on days like this, you're just looking at those levels where the market can be attracted to like a magnet and where they try and push the market back down or either obviously, try and go and support it. So more so when you see these events, you're looking at levels where the market could ultimately, when the fast moving situation, where they're going to try and rotate to as far as a target, upside or downside. That is not that far away, 71.43. So we're just going to go with the straight up level, which is going to be 71.42. 71.42 for support. Resistance. This thing sure has been locked in a very tight place now. It's going to be right there, 72.45. About 50 pips away, maybe 53 pips away. Obviously, on a day like today, you focus a lot where those key closing levels are for the market. Let's go on and move into the Kiwi now. Right there on a short-term basis is going to be key closing resistance 68.78. Not that far away from it, but if they can recapture that, certainly open the door for them to start to challenge back higher. So it's going to be 68.78 on daily resistance on the bias chart. Right there would be your closing support, 67.89. That will be resistance right now. It's going to be 69.06. And let's go moving now to the dollar CAD. Certainly, this has been impacted by crude oil without a doubt. And here's the key resistance on here, which is 35.12. 35.12 on a daily. 35.12. Let's mark this off. And you can see the significance here of 35.12. We're not that far away. Things could be a whole lot worse. If you look at where crude is at, to be quite honest, I think we should probably be up here at 36.44 if you think about that. So it's actually done its best to keep the lid on, but we shall go in and see. So a daily closing support here on the dollar CAD. It's going to be right. Well, that's a long ways away from here. So on a short-term basis, it's going to be 33.96 for daily close support. This wick's a little bit too long, not the wick, the body, to consider this necessarily a hanging man. We are looking at it on a 2-hour chart. We did go on and pare back a bit, try to make another run up here. We'll see how oil can hold its own here. My oil thing is stuck right here, but I did put it on crude oil futures, which are going to be delayed. I was seeing 46.49 on the actual prices. 46.76 here. Let's keep an eye on this 2-hour chart. As far as resistance, short term is going to be right there, 34.93. 34.93. Intraday support for right now is going to be this 34.15. Seems so close. I mean, you can make the case really it's a little bit lower here, 33.93. But if they come down here, they'll probably overshoot that a bit and then pop back up. So let's just, we'll just move it just a hair lower, not much. We'll call it 34.07. 34.07. Let's see how crude oil behaves today. Okay, let's go move into the dollar Swiss. We're really having a tough time getting beyond here. We did actually make it up to 99.36. Let's take a look here. I picked some up yesterday on this test a little bit early, and then we moved back up, but that 99.23 was staring this market in the face. It really had a tough time getting beyond that after this initial move up in here. Resistance, short-term basis, pretty clear it's going to be 99.44. I thought that was off. Hang on. There we go. Okay, we already had that in there in place, 99.44. I don't know why this thing comes up every morning. I'll have to take a look into that and see what it is, but I don't want to mess around with it. Support's going to be 98 right there, 98.91. Right there, 98.91. It's actually very, very close. Probably even a little bit too close. $98.50. There we go. And let's go move in now to the dollar yen. I think we had this in place, which is this 1186. You can actually move this a little bit lower here. It's actually going to be 1175 here on this support, on the closing support. So 1175. As I said, today it's all about levels. We could do with, some more in-depth analysis and looking for any patterns. But on a day like today, it's all about the levels. It truly is that. And let's go and take a look on the upside here on the daily. Nothing definitive that I'm seeing here on the daily, on the upside. Let's go and move in now to the 2-hour chart. With equities under so much pressure, and it's just relentless, it's just not letting up at all. Certainly the dollar yen is under its own pressure, and I'm surprised it's even holding up this well at this point. Resistance at this point will come in at 12.91. Right here. I think we have a tough time trying to make it even up to 1302, so 12.91. And support will come in there at 1174. Short-term support, 1174. There's a chance we could drop down here to this 1140, but that's once things really get kicking out. If that were to be the case, then you don't want to be stepping in the way of the dollar if it's sailing lower. But on initial look-see, 1174. Whereas the market reacts to it, bounces right off of it, but then assaults it again. So it's right in here with the 75. So it's just right on par. So let's move this out here. With that, so let's go on and move into the cash dollar index. We've had this mishmash here. Nothing definitive that I'm seeing here that would nothing here on the closing on the upside. They have to say, okay, that reclaims things and we're on our way. We'd have to really get going to change this on a short-term basis. We had this dark cloud cover with a follow-through here. Daily support, well, we already marked off 96.72 yesterday, and that's exactly where they went to before they saw a bounce. Really, it's going to be all the way down here to 96.21 on the daily. Right there on a daily close support. Support right here at 96.40. The bottom is, so if we get a look-see and it jumps, you'd probably get a reaction for the 40 might pop up, and once again, just like we talked about the dollar yen, then reassault it. So it'll be 96.40 initially on first blush. On the upside, right there, 97.21. And let's take a look at the XAU. This market just continues to want to motor higher. And it's just, we talked about this last couple of days. It's really, after looking weak and it could lose its momentum on Monday, turning things around and really wants to go on and get this push higher, thinking it's going to get the handcuffs taken off of it by the Fed. Short-term resistance comes in right here on the daily at 12. There, 1250. It'd be key if they can close above that, and we could very well do that quickly. So it's going to be 1258. Daily support still comes in here at 1235, which would be key. I think yesterday we had to do the same thing as I switched over to 4 hour just to get a little better perspective. A lot of volume right there, a lot. And that's 58. Support, well, this can be right there, 1242. We had 4405 as our resistance, and we made it up here to, let's take a look on here. Looks like we made it up to 4410. That's going to be the resistance right there is 4431 on the bonds. 4431. Support comes in right there, 4308. We had 4307 yesterday, just moved just a tick higher. And we'll move into the buns. I think this is going to still stay the same right here. Got 63.56. Let's see what we had. No, I actually moved it up. It was as high as 63.71 with the, let's take a look here on the, yeah, but the whole thing is things are a lot better. I saw one of the guys joke in the chat room, Europe's fixed. And that's probably going to be the thing. And so we'll stay with the 63.71 from yesterday. If they try to push it, but it's acting like it's going to have a tough time. Actually, on the short-term basis, yeah, let's go and move that just lower. And that's actually the risk right there, 63.55. And the market is acting like, hey, Europe's fixed, 63.55. A lot of this was positioned, didn't remember all the Italian woes and stuff. Supposedly we got that beyond and fixed. I don't even know we could make it up there. Let's go right here, which is 63. Yeah, we'll go with that. 63.55. And we're open to a little bit of a slide back here as some risk starts to abate from the EZ, from the year zone. We'll go 62.99. Resistance will be 109.72. That seems like a far ways off, but if we do get a relief rally, that's what we're going to shoot to, 10.972. And we have been hugging these lows quite a bit. It's going to be 10.711 initially. And once again, I think the market's looking for a relief rally to start with. I see this pair back in a bit as we get closer to the FOMC. Pull this up. And here's the bias chart ready for FOMC day. I'll get this posted into the room. And thanks for joining us here on the European Crossover webinar.